Today, we're diving into the aftermath of a hypothetical but very possible 2026 war with Iran. We're going to unpack the huge economic and geopolitical consequences of a conflict that, while incredibly brief, ended up leaving a massive, lasting mark on the entire world. It's a pretty stunning contrast, isn't it? The actual fighting is over in just 3 weeks. But the shockwaves, economically, diplomatically, well, they're projected to cost trillions and could reshape global alliances for years. That's the story we're exploring. So here's a quick look at how it all went down. We kick things off in early 2026 with a U.S. economy that's holding steady. Then, boom. February 28th, the conflict begins with U.S.-Israeli airstrikes. And in the 3 weeks that followed, the global economy just went into a complete tailspin. Okay, so to really get the full impact of this, we first have to wind the clock back and look at the economy right before the conflict. What was the state of play? On the surface, the U.S. economy seemed pretty resilient. We're talking a solid growth forecast of around 2.25%. But, and this is so important, it was already kind of vulnerable. Hiring was starting to slow down, inflation was creeping up, and you could feel that consumers were getting a little nervous. So yeah, the foundation looked strong, but the cracks were definitely starting to show. The second those strikes hit, the very first shockwave was felt in the global energy market. And this right here is where the economic pain really began for millions and millions of people. And wow, this chart just perfectly illustrates that shock. With the Strait of Hormuz, a crucial shipping lane, disrupted, Brent crude oil prices just exploded, blowing way past the $100 per barrel mark seemingly overnight. That's what a market panic looks like in real time. So what does a number on some chart in London actually mean for the average person in America? Well, it means this: an immediate jump of 15 to 20 cents per gallon right at the pump. This isn't some abstract economic theory. This is a direct, painful hit to the wallets of families and businesses everywhere. The real fear was that this was just the beginning. See, sustained high energy prices threaten to trigger something that economists absolutely dread: stagflation. That's when the economy stops growing, but prices just keep going up. It's a truly toxic combination that could wipe out years of economic progress. Okay, so beyond the gas pump, what was the broader fallout for the U.S. economy? Well, it's a pretty complex picture, a real balancing act between these staggering costs and what some people saw as strategic benefits. This slide really lays out the trade-offs. On one side, you have this massive military spending and shaky markets really hurting consumers. But on the other side, domestic energy producers saw their profits soar, Iran's regional threat was dialed back, and, kind of surprisingly, investor confidence actually held up pretty well. And let's put a real number on that military spending. We are talking about over $890 million every single day. That is just an immense financial drain, fueling the conflict while pulling critical resources from everywhere else. The stock market's reaction was really fascinating to watch. It took an immediate 6% hit, total shock. But then, almost right away, you saw this buy-the-dip mentality kick in, leading to a partial recovery. It just shows that despite all the chaos, there was this underlying faith in the U.S. economy, even if the market did end up about 4% lower than before the war. But here's the thing. The numbers, they don't tell the whole story. The biggest cost might not be measured in dollars at all, but in diplomacy. The war caused this deep, painful fracture in America's alliances with its key Arab Gulf partners. And this quote, man, it just captures the aftermath perfectly. While the formal alliances with countries like Saudi Arabia and the UAE were still there on paper, the fundamental trust that holds them together was completely shattered. And that broken trust? Yeah, it comes with a very real price tag: $3 trillion. That's the estimated value of investments these nations had pledged to the U.S. over the next decade. And after the strikes, all of that was suddenly put on hold. So what exactly did they do? Well, remember, these nations had lobbied against the strikes. So when the U.S. acted anyway, they were left completely exposed to retaliation from Iran. Their response was this quiet but really significant pivot away from the U.S., reviewing deals, pouring billions into their own defense, and actively looking for new global partners. And that created a whole new reality. The relationship now is way more about self-interest than it is about deep trust. And while, yeah, they still share common interest, that core belief in America as a totally reliable partner, that's probably not going to just snap back anytime soon. So as we wrap all this up, let's just take a second to think about the legacy of this short but incredibly consequential conflict. What's the biggest question that's still hanging in the air?
Markets can eventually stabilize. Gas prices can come back down. But damage to international trust, that is so much harder to repair. And it leaves us with this one central nagging question. The war was over in a matter of weeks, but will the cost to global trust be permanent?